Hi, and welcome to this morning's early global view. It is currently 6:45 a.m. U.S. Central Time on Thursday, December 17th. And this post-FOMC follow-up was designed to be a full global view once we had the Asian and European markets trading again today. And of course, as we're sure you know, the Fed went ahead and upped the base rate range 25 basis points to a quarter of a point to half a point, and the equities responded pretty well. But so far, the govies haven't done too bad either, so it's going to be very interesting. And for anyone who has not seen it already, we did a commentary post yesterday evening on the Fed's normalcy bias, still trying to make out that things are looking great. We shall see. And the question is specifically, what did this mean to the markets? What was very interesting after being up initially on the Fed upbeat statement and pushing up above this key 2052 high that was right back up toward 2052 to 2054, which is the equivalent of the 60 to 62 area on the December front month, which expires today. So we're going to start watching March in the context of all these numbers. So after stalling a bit, the quick sell-off held right near 2034. And of course, 2034 had been the previous day's gradual drifting out of the downward channel up break. But once that held, the market was able to push up further. And we're looking at a market that pushed back above that area yesterday up into the 2068 area. Now remember, December front month is trading at roughly, give or take, an $8 premium to the March contract. So as we proceed here, the 2075 to 80 resistance in the front month, which is the equivalent, subtract $8, 2067 to 2072 resistance in the March contract has already been tested this morning. As a matter of fact, the March S&P is up at 2069. Of course, that's up, pardon me, that is up $5, and it's been up as high as 2073. Very important. And this would go back to the close just back barely above 2075 to 80 by the December contract early last week, from which the energy market weakness dragged it down throughout the balance of the rest of the week in spite of attempts to rally, and that was up here at 2073.70. So we're going to have to watch that today in the March and see if it gets through there or if it stalls. If it gets through, it means the lead contract's out through 2080, and that would mean the March contract probably goes up at least to 2080, and then we'll have to make the next decision there, because into tomorrow, that's going to be the important level for March as it becomes the front month. And as far as lower supports, once again, back into 2034, that was also important. You add $8 to that, and it ends up being the 2042, in other words, just above the 2035.40 area in the December contract. And you can see how important that was after the gap back up on Tuesday, and also on the dip last week when the market tried to hold. So with that, that's pretty much it for the short-term view of the S&P 500.